Before we sort of delve into IBC, what I plan to do is try to give some color around what was the need at all for a code like IBC. Why did we need it? I think as India, as all of us know, we love to have many rules, regulations, laws, but the implementations has always been poor. And I think if I walk you through few of the next slides, it would be very clear that something like an IBC was definitely required. And we'll come to that in terms of whether IBC has been a big ban or a boon. I'll come to that at the end. If you look at some of the data, I think to start with, I think the aspirations is to effectively be a $5 trillion economy. And this is the Government of India figure. I'm not even venturing into what Mr. Ambani said in the last Reliance AGM of being a $10 trillion economy. That's aspiration. Even if we try to be a $5 trillion economy, I think that places us at number 3 in the ranking. So my comparisons, when I compare myself, where do I stand in terms of various parameters, would only be compared to the top 5 and not to the below. Because if that is the aspirations, then we need to make sure that all our parameters fits into that category. So where do we stand on overall ranking, which is one of the key factors that the outside business communities look into while coming into India. Over the years, thanks to some of the efforts by government, I think 2019 we rank at 77. In terms of where do others stand, I think we are still way behind all of them, so a lot of ground to catch. Now, specifically when you derive the ease of doing business, resolving insolvency is one key aspect of deciding that particular ranking. Where do we stand as India? 108. Where do a country like Japan stand? Number 1 in the top 5 lists. There's a lot of ground to cover. Now, this is the thing I think almost all the speakers talked about, the NPA saga, the NPA conundrum, the NPA problem that we have been struggling with for last 3, 4, 5 years. If I just tell you the number, March 2018, I guess, the total gross NPAs of entire banking system was $150 billion. For a $2.5, $2.6 trillion economy, $150 billion of NPAs is just hoping kind of, and it's a mind-boggling number, and there should not be any excuse for it. But yes, it is. But if you see the trend, it has increased in recent years. Is that it, that all the NPAs started coming in recent years? I personally don't think so. The recognition of NPAs has been given sort of priority by some people at RBI. We should all be thankful to them. If you look at the bankers, the eagerness to now recognize NPA as real NPA is now much more than what it was earlier. Now with the NPA recognitions and the introduction of the asset quality reviews and the IBC, now the bankers are far more forthwith in terms of recognizing NPA and trying to deal with that. With the bank mergers of creating a larger banks rather than the smaller banks, just to cut down or curtail the redundancies has increased. With all of that, I hope that the NPA levels goes down further from here. But if you look at the chart on the right, at around 10-11% of gross NPAs, I think if I read somewhere and if I'm right, we stand number 2 in the world in terms of the NPA levels. Is this something that we can live with? Definitely no. Now, let me just quickly touch upon with my experience as to what goes wrong. Why is it that India had such high level of NPAs as compared to some of the other grown economies? Is it bad investment decisions by the promoters? I personally don't think so. I have a view that the average Indian entrepreneur is far way intelligent than their counterparts outside. And with this, in fact, I'm just itching to share one of my experience with a friend of mine who started with a small startup a few years back. He was starting his business. He had to shift his office. What he did is, obviously, he reached out to a guy for shifting his entire office furniture from one place to another. And he's a budding entrepreneur, very sharp focused, very intelligent, and he has done very well in last few years. What he did is, rather than incurring an expense to shift his furniture from one office to the other, one night he sold all his furniture and bought the same furniture in OLX. What he got, he didn't have to incur any expense, he rather got a cashback. So this is the level of intelligence that Indian entrepreneurs have. So I don't think they can make any bad investment decisions. Is it a problem with the credit evaluation or the risk management that the banks follow? There has been a problem in the credit evaluation process for sure, and that need to be recognized, especially with the government banks. Now, are the external factors responsible for this? Yes, there are a lot of policy backlogs. There are a lot of decisions which are pending at levels which are external to the promoters. That also contributes to it. Time and cost overruns. I mean, we have seen our ease of banking ranking, right? To put up a business in India, be it you are an Indian or an outsider, is a nightmare. So that leads to the cost. Too much focus on growth leading to bottom line and cash flow issues. Yes, that has always been a problem. I think we as Indians try to run much faster than we can at times. That leads to some of these problems. Bad accounting practices leading to inflated numbers. I don't know how many of you tracked, and I'm so happy that this bad accounting practices is not linked only to India. I don't know how many of you read the recent one, and if that whistleblower report on GE US is to be believed, there is an underreporting of $38 billion in their account books. So it's not akin to India. With the IBC, with the NPA recognitions, with the reviews, with SFIOs, this trend is changing. But is it clean as of today? Not yet. Long way to go. Lenders' reluctance to recognize NPAs on time. That has been a real big problem, which thankfully by now has been cleared with the intervention of RBIs and the other regulators. Now, these are one part of the problems that has led to all the NPAs, but at the bottom, is there something else? I would just leave that to you to ponder over. I think all of us know what I'm referring to. Now, this is the problem with the NPAs and the bad debts and where do we rank. The other statistics that we need to look, when it comes to recovery by lenders, where do we stand? In terms of recovery rate, our rate has been 26 cents to a dollar as compared to 92 cents to a dollar for Japan, 81 to US. So we don't have any sort of ranking when it comes to that. Cost of recovery, 9% to recovery of costs. That's a humongous amount of cost. I think most of this goes to the lawyers. And I believe that in case of a dispute, the only one who benefits out of the whole game is the lawyers. The time taken to recovery, and this is the biggest drawback, 4.3 years to resolve a recovery suit. This is inexcusable. And this was one of the primary pillars on the back of which IBC was brought in. If you look at the last chart, there were plethora of rules and regulations which sort of contributed to the debt recovery. But if you look at their numbers, cumulatively what they couldn't do, IBC has done in the last 2 to 3 years. So this definitely justifies that something like an IBC was necessary. Now, what was the need? These were the legislations which were in place pre-IBC. We had SERFICI, we had SICA, we had RDDBFI, we had CDR, SDR, we had S4A. Bottom line is there were a plethora of laws, but none of that focused on revival of the unit as a whole. The entire focus was on enforcement and try to get your money back as a financial lender. That cannot be the case because that has other impacts on the economy, on the employees, on various other things. Something like SICA, as one of my co-panelists referred to, was used more as a promoters to seek immunity from legal action rather than putting all emphasis on reviving the unit. And none of these units which got listed in BIFR actually went back, or very few of them went back to normalcy. Now, if you look at all these laws, all of these were data driven. And while the process is being run, the current management which was running the same company leading to the BIFR or SICA was the one in charge of doing it. So it's like asking a thief to prove that he is not a thief, right? So you cannot have something given to the same set of people which brought a company from X level to Y level and then ask them to take it back to X level by putting all powers to themselves. So something like an IBC was definitely necessary. Now came in IBC and what impact it had on the entire recovery framework. The first one was effectively probably this is one of the biggest factor of having an IC. One single uniform code. You don't need to refer to 10 other legislations. You can get your recovery done under one specific piece of legislation that treats your insolvency, bankruptcy, liquidation. I'm not touching much on liquidation because I am an eternal optimist. I believe that insolvency and bankruptcy is good enough to sort of bring back the company as a going concern. Now, the primary objective of the law was to revive the unit rather than enforcement, and recovery. Once admitted, the people who are board of directors who were running this company leading to this level are out. The resolution professional, who is an outsider expert, and also the committee of creditors monitors in place, replaces the board of directors. I still ponder over one aspect when it comes to the COC plus RP taking over the board of directors, and I would just share my thoughts on that. That when you are running a bank as a financial lender, the fact that you couldn't run the bank, sorry for being so straight, but if you as a financial lender could not run the bank so well that you led into NPAs, now you are getting to run a steel company or a power company or the other company, how are you going to run and recover your money, right? So I still ponder over how does this thing work, and at some point in time, hopefully, there is a particular body of industry experts that comes in place, which gets to the next one is, in fact, it becomes creditor-driven rather than debtor-driven. It's a very time-bound process, 180 to 270 days, now amended to 330 days. And these 330 days amendment, if you look at the rationale for it, is litigations, because there are so many litigations that the entire process needs another 50, 60, whatever number of days. Now, COC is expected to balance the interest of all the stakeholders, and there is a clear waterfall mechanism as to once the money recovered, how should that be paid to the stakeholders. Net in net, if you look at it, once IBC came in, 2 laws got repealed, 11 got amended, there is a time-bound process of 180 to 330 days. There's a particular certainty of whether it will lead to a resolution or liquidation, as the case may be, and there is no asset stripping that is allowed. I would refer to Dr. Ramana's comments about how does this help in terms of M&As. If you look at an IBC in India to similar kind of legislation outside, there is stripping of assets that is clearly allowed. So people who are not willing to take up all liabilities of the unit itself or of the promoter itself can simply come and buy all assets and move ahead. But the key thing out of the entire game is if you are a creditor where the dues altogether is 100,000 rupees, can actually drag that company to entire CIRP process. I think this limit is too low for some rough creditors to take a good, well-running company to CIRP. This is the whole process. The board of directors goes out, all powers vest with the insolvency professional and the COC, and a moratorium kicks in, as in nobody can take any action against the target company, so that the resolution professional and the COC can actually redraw the entire game plan and try to revive the company as a whole. Now, this is a process. Once the final decision in the NCLT process comes in, it comes in with a definitive proposal whether the resolution plan submitted by the RP is acceptable and hence lead to implementation of it, or it gets rejected and it moves to liquidation. So as I said, there is a particular certainty when it comes to all of this, and this is the clear waterfall mechanism. If you look at the waterfall mechanism, which is more relevant for a liquidation case than insolvency and bankruptcy, the key focus again is on financial creditors. There have been numerous cases that has been filed with Supreme Court, and if I'm not wrong, in case of SR, the Supreme Court has actually stepped in and said you need to put the operational creditors also for some of their dues. You can't just give them nil, and the financial creditors takes away everything. So this is a clear-cut waterfall mechanism. Now let's look at the impact. Now, when we had this law, we didn't have this law. There were this whole recovery thing which was going on for years. The recovery percentage was very low. Once we had this, let's see what it changed. Pre-IBC, something which was taking 4 years is on an average taking 1 year. I think with the extension of time, this 1 year would again go a little bit up, but still much better than what used to take 4 years. Cost of resolution used to be 9%. Now it's down to something like 0.2%. I think 0.2% is a little bit of exaggeration, but I think as long as it stays anywhere below 2%, I think that would still be a good number. Recovery rate from a 25-26% has gone up to something like 50-55%. Probably no other law has been so impactful as IBC when you look at this. This is the figure compiled based on the cases which has been referred to IBC. Now let's have a look at it from an indirect impact perspective. The day IBC came into play, there has been a certain fear in the mind of the promoters to pay back that debt. If you look at the recent IBBI data, something like 4,500 cases have come out on their own, have paid, and a recovery of something like a 200,000 crore has already been made, which without an IBC, I think would not have been possible, because the promoters love to take the money, sit on it, not pay, and make merry on the bank's money. The gross NPA levels of banks have already started going down, I think thanks to RBI and some of the other regulators, where most of the large ticket NPA cases have already got recognized. And I think from here on, MSME is something that need to be treated, and those NPA levels, I don't think is going to go drastically up from here on. I think one of the best other thing that the government has done is effectively with the IBC implementation, there have been various suggestions from various stakeholders. They have been pretty open to it. They have actually been making amendments, trying to make it aligned completely with the market realities, and they have been making all the amendments very effectively in a timely manner. Now, these are the pluses. What are the minuses? The minuses, effectively, if you look at it, with the IBC actions of dragging promoters and companies into the CIRP process, there is a definitive amount of fear. So if I'm a promoter, I had a particular growth trajectory on my mind, I think 10 times now before approaching a lender and taking a money and using that to make some return and pay that money back. One of the critical factor out here, as Dr. Ramana was referring to, is the cost of capital. Probably as an economy, one of the primary reasons for many of the businesses going forward is the cost of capital. We are an economy with probably one of the highest cost of capital. I don't know how many businesses you can run as an entrepreneur which can give you 20% plus returns to even repay some of the debts which is being given by some of the foreign financial lenders. So this, unless redressed, this NPA thing will be a continuing affair, is what I think. The last one, as I already mentioned, 100,000 rupees default for a financial creditor or for a operational creditor or for an employee even of this target company to drag the whole company to CIRP process. I think this is something which needs to be looked into. These are some of the cases that has gone in first in the IBC. I would want you to focus on only two columns. Look at the outstanding debts. For companies sitting on $8 billion, $9 billion each and not paying those level of debts, it's something I think some action needs to be taken, and IBC rightfully has given that leeway to the regulators and the others to take that action. And look at the fourth column, the lead bank. I think barring ICICI, all of the other banks are public sector banks. So this is a reference to that something else that I had put in some of my initial pages. Now, what are the opportunities and challenges? Now, for lending banks, this came in as a great thing for recovery. But one of the best things that they have been able to do now, that as a lending bank and as also as a promoter, both the parties are now much more forthcoming to come into one-time settlements and close the case rather than running a litigative process. Case in example, the recent Piramal and Bain Capital investment into Panacea Biotech. Panacea was almost on the verge of going into IBC, but these lenders stepped in, took the company out of any IBC and settled all debt on OTS with the lenders. Tata Sponge Iron's investment into Usha Martin. So from lending banks perspective, this has been probably one of the best things that has come up. If you are an institutional investor, this gives you a lot of opportunities to buy stress assets. Has it been happening? I don't think so. Most of these institutional investors looking at the litigations and litigative processes that India throws at has been more like a fence sitters and watching it closely, but not the activities level are not as much as was expected. For structured lenders, there's a lot of business opportunities to finance the resolution plan that gets put in place. And if you are any other lender wants to do business, if you are an investor with a lot of cash on your balance sheet, there are new ARCs are being put up, there are new AIFs being put up, there are new FPIs being registered, there are new partnerships which are coming in, the CPQD Edelweiss partnership, Bain Piramal partnership, Apollo ICC partnership. So there are a lot of lending institutions or alternative lending institutions which are being put in place, which in a long run is going to help not only the IBC cases, but also the other cases. For insolvency professionals like Vishal, this is an ocean of opportunities. I think for next 10, 20 years, there's going to be a lot of IBC cases that he has to deal with. What are the challenges? I guess with the IBC coming in and with the initial sort of recovery that happened, there is a lot of expectations that has gone in. Can IBC match to those kind of such expectations? Only time will tell. M&A activity, as I said, most of these investors are fence-sitters. Largely, the reluctance coming in from the litigative nature of Indian transactions. And effectively, if you look at some of these recent comments on IBC, different litigation platforms or different courts are taking completely different interpretations of the same rule, which is IBC. I don't know how this happens, and this happens only in India. So one of the biggest recommendations from industry houses that has gone in now is to just recognize COC as the final authority to decide on any of these financial matters rather than making it open for court to interpret. And the other thing is, in an IBC process, one of the very key aspect in a legal agreement is representations and warranties. There is no representation and warranties. If you buy a company which is stressed out and coming in out of the IBC process, you can be open to perpetual litigation and you can just keep fighting those in court. Sector issues, as Dr. Ramanagan referred to, something like power sector and some of the other sectors, those sectors issues still remain. Unless those are addressed, these IBC and NPA cases will continue as is. Procedural inefficiencies. Now, as we all know, the initial mandate was to go till a maximum of 270 days, and this was one of the pillar for IBC to be successful. That has already been pushed to 330 days. So a lot of procedural inefficiencies need to be curtailed if we want IBC to be very successful. Overburdened tribunals and lack of experienced hands. I think people, I'm sure Vishal will vouch for it. When we approach an NCLT, and if we look at the level of interactions that happens at NCLT and the people sitting in NCLT, still has a lot of ground to get covered so that they understand the ground realities better rather than making the whole thing a rule book bound sort of orientation. Sole bidder scenarios, this has been another big problem for the entire IBC process. When you get only one bidder to bid, case in example, MTech Auto, I think Liberty was the only bidder. So Liberty itself went back after a detailed, I think, delay in the entire decision making process, and now that has moved into a liquidation. Now when there is a single bidder, as a financial lender, you can easily decide and still go ahead. But to be fair to the financial lenders, I think they are still have this at the back of their mind, the fear of CVC coming after them. So why would I decide? Let the court decide, and let it be a liquidation process. So that needs to be resolved. Contingent liabilities, as I think all of us as business professionals know, this is a big hole in the entire balance sheet. You don't know what that contingent liabilities is. So if you're buying a company with a contingent liabilities with a higher number, you don't know what you might need to end up paying. So when you are calculating whether I need to bid for a stressed asset scenario, what number you need to figure that out for contingent liability at that point in time, very difficult to say. And this last thing is uniformity with other regulations. As I said, we have many regulations and that need to come into one platform. Now the last one, the decider, and this is what is exactly my view. When you are a lender and clearly putting your lender hat, if you decide whether IBC has been a great piece of legislation from a recovery perspective, of course, yes, there is no denying. But if you are a promoter or a company and you are being asked whether IBC has been a beginning or an end, I think, and especially if you are a promoter with a clear set of growth trajectory, I think the answer is very clear. And especially all of this happening in a time when an economic slowdown, if we were to trust what the experts are saying, is looming large on us. Whether this is a big piece of legislation and whether it's a ban or a boon, I think the jury would be out very soon. Thank you. Thank you for listening to me patiently.